Warner Brothers Discovery swinging to a third quarter loss, including a 6% decline in revenue, but the company confirmed plans are still on track to split into two companies by mid next year. Joining me now, senior reporter Allie Canal and Geetha Ranganathan, Bloomberg Intelligence senior media analyst. Allie, let's start with you. Just give us those sort of highlights of what we need to know from this report.
Yeah, from the report and also the call, which just wrapped up about an hour ago, as you said, Julie, is still on track for that mid-2026 split. It seems like a split is plan A, but they also said that they are open to all strategic alternatives, which include a potential sale of the full company or parts of the business. Now, they would not talk specifically about the different bidders that have been in the media, in the news. We know from various reports that includes Netflix, it includes Paramount, and also Comcast. Now, Netflix is likely only interested in the studio side of the business, having control of that IP. They said on their own earnings call that they have no interest in owning any type of linear networks, whereas Paramount Global has reportedly been interested in acquiring the entire company. Again, they didn't really say either way, but it's clear that the breakup plans are starting to gain a bit of urgency, and this earnings report really highlighted the need for that. We saw the bright spot came from the big screen. Films like Superman, The Conjuring helped push movie revenue up 74%, but that success wasn't enough to offset losses on the TV side of the business. We saw network revenue drop 23%, advertising down double digits. Like you said, the overall company swung to a $148 million loss on just $9 billion in revenue compared to a profit just 1 year ago. So there's just this wide gap between WBD's studio business and then the struggling linear side. And then finally, another thing that stuck out to me on the call is that Warner Brothers Discovery is really trying to set up the sports side of the business and news for the next chapter. So they were saying that they plan to build a new standalone U.S. sports streaming app, and they're also retooling CNN into a global digital subscription platform that they hope can stand on its own. So really trying to modernize different parts of the business. That is their pitch to all the potential bidders. We'll see. There is reporting that they will announce by Christmas whether or not they're going to sell all the business, whether or not they're going to commit to that split. But like I said, that the split is plan A, set to be completed in mid-2026.
And Geetha, let's get to you here. So what did we learn in this report that tells us about the value of each of those parts in a potential split?
Yeah, absolutely, Julie. Allie's absolutely right. The studio and streaming businesses are progressing really, really well. And this is really where the value for Warner Brothers Discovery is. So as they kind of split, the two units into the no growth, which is the TV networks, which is plagued by, constant cord cutting, ratings weakness. That is obviously a part of the business that is generating a lot of EBITDA. We're looking at about $6-7 billion in EBITDA. But unfortunately, the multiple that you're going to be able to achieve on that business is going to be at most mid-single digits. Turn to the other part of the business, which is really the high growth story, the studio and the streaming assets, which everybody seems to want, including Netflix and Comcast. And that, is generating this year will generate close to almost $4 billion in EBITDA, has a really strong path to, get to far more higher levels of profitability. But the valuation multiple that you're going to be slapping on that business is going to be something like mid-teens. So obviously it speaks to very different growth profiles of these two businesses. And really what we're looking for in terms of a combination is the synergies. So, if you're looking at even a Comcast kind of coming in, just kind of combining the studio unit with all of NBC, we're looking at something like $3-5 billion in synergies or cost savings. And that is really where a lot of the value is going to come from for any of these bidders.
To that, Geetha, you were just talking about some of the synergies. I guess out of all the potential bidders, who do you think would benefit most from that access to WBD, whether it be the entire company or just that studio IP?
So I think in terms of the entire company, Allie, I think Paramount obviously benefits the most. They are the ones who seem to really lack a clear strategy at this point. Yes, Paramount combined with Skydance, I just don't think that's going to be enough to move the needle. They are in a pretty bad spot when it comes to both their TV networks business as well as the studio and the streaming business. The streaming business still doesn't make any profits. Yes, they've kind of gone out, acquired a lot of sports rights, whether it's the UFC. They've done these content deals for, South Park, Duffer Brothers. subscribers, but they've also lost Taylor Sheridan. So, there's a lot of different moving parts here. In terms of, the most upside, I think Paramount Skydance has to benefit the most, especially if they buy the entire company. In terms of the least upside, I would say it would be Netflix. They really don't need to go out and acquire the studio. I really see this more as a defensive move for them. I don't see them being able to dramatically increase their subscriber base, which, by the way, right now is well over 300 million just by bringing on HBO Max subscribers. So they'll have to kind of pretty much, shutter down the HBO Max business. They pretty much have to shutter down global theatrical distribution. Yes, they do get a lot of IP. They do get a fantastic library. I just don't know whether it's going to be worth it, because we're looking at a price tag that is somewhere in the range of about 75 to 80 billion. And I just don't know if Netflix should pay such a high price.
And Geetha, just quickly, lastly, if you're talking about the non-film business at Warner Brothers Discovery, like if it is so tepid, why does anybody want it? What could be the fate of that if it does end up getting split or not getting taken over by Paramount?
No, that is a great question. The reason, it still throws out a lot of cash, Julie. So, we talk about the business. Yes, we talk about, the TV business being severely challenged. It is kind of a melting ice cube. But the idea here is that if you combine forces, you can stem that decline. And there's still a lot of value to be extracted because, as I said, again, throws out a lot of cash. So even this year, of the total EBITDA that Warner Brothers Discovery will generate, 70% is going to come from that challenged asset, which is the TV networks. So there's still, a lot more to go. Of course, there's no growth, but there is value in a combination in a potential M&A transaction.
We just heard the investment storyline behind Warner Brothers Discovery's earnings report. How about the impact of the company's planned breakup from the perspective of someone who actually produces movies and TV shows? I'm joined by Chris Fenton. He's a media executive and professor at the University of Southern California. Chris, thank you for being here. So we've been talking about, what's going to happen with Warner Brothers Discovery. Will it break up? Will Paramount Skydance take it over? As somebody who sits inside the industry, all of this, what does it sort of reflect about the backdrop for the business of making entertainment right now?
No, it's a great question. It was fantastic to listen to those analysts talk about it from the financial perspective. But the fact is, there's also a huge creative and human perspective involved with this. Just in the last few years, we've lost 41,000 jobs here in LA County in the entertainment business. Obviously, further consolidation will further mitigate the amount of jobs that are here. And then on top of it, we're looking at a consolidation in the creative aspect of Hollywood. Even if Paramount takes over Warner Brothers, you're probably going to see a downsizing in the amount of output that is put onto the screens as far as the movie business is concerned. And if a Netflix picks up a Warner Brothers, they might actually just more pick through the library and do redos of a lot of the IP that they would acquire in such a situation. So we're seeing a lot of nervousness and a lot of people really on pins and needles in terms of how this is going to play out over the next few months.
And Chris, we were looking sort of, obviously, the movie business is huge out there on the West Coast. We were also looking at Atlanta, which had been such a growth area for the filmed entertainment business over the past few years. But we've now been seeing the number of things being shot there really decline as well. It's been happening in LA, to your point. What's been contributing to that besides this consolidation that you're talking about?
Yeah, well, what's really contributing to it is the fact that we don't have a national policy in terms of film rebates and subsidies. So it's really hard for the United States to compete on a production cost level with the 70 plus nations around the world that do have nationwide subsidies and rebates. So there are certain markets around the world where you can actually get as much as 50% of your production costs back by the end of production. Here we have states with very aggressive incentives and rebates, but they simply can't compete with that. And then when you look at countries, say, such as Canada, with a currency that's much weaker than the United States, you can actually see even a more amplified effect. So when you look at Georgia, for instance, we've lost 50% of the production that was done there since 2022. That's about $2 billion worth of direct economic activity. And Marvel was a big part of that. And on every Marvel movie, there's anywhere from 3,300 to 4,500 people that work on those crews. That's a lot of jobs.
Yeah, it is a lot of jobs. As you know, President Trump in the past has floated an idea of tariffing films that come into the U.S., although it hasn't happened. I'm not sure how it would work from just a mechanics perspective, but it sounds like you think that incentives would be much more effective than something like tariffs.
Well, look, what we're trying to do is incentivize the studios to keep production here, which is just one industry in order to bring back manufacturing, right? We're trying to do that in the automotive space and technology and various other areas of industry. Hollywood's just another one of those. So what we're trying to do is get the studios to say, hey, look, it's smart for us to keep production here. How do we do that? Well, there's both a way to do it through rewards and also through punishment, just like raising a teenager, right? That mix is going to make it a way that studios will evaluate and decide to keep it here. Personally, I'd rather keep it on the reward side. More incentives, more subsidies, and a way to make it easier and more cost effective to shoot here in the United States. I'd like to avoid the punishment side, which is really the tariff scenario.
Chris, also at the center of the trade war is, of course, between U.S. and China. Films have been sort of part of that. And you have a lot of experience about U.S.-China, the film business between the U.S. and China. So what's the sort of current state of play, and what effect is that then in turn having on the U.S. movie business and the Chinese market?
Well, the Chinese market was a golden goose for a long time for the United States. It was a major part of the revenues that we were generating on an annual basis. But unfortunately, we really taught them well how to manufacture their own product there that caters to their audience way better than anything coming from Hollywood. So at certain points in the last 10 years, we were as much as 60 to 70% of that market. Now we've dropped down to 5%. So the China market has really become insignificant. But that doesn't mean the international market is. We're still generating on big franchise movies as much as 60 cents on every dollar that comes in. So it's important for us to look to the consumer around